This is the current federal tax developments for the week of August the 12th, 2024. Current federal tax developments are brought to you by Kaplan Financial Education and by your state Society of CPA. I'm Ed Dollars, and this we're going to look at a few things that happened. Again, it's August, so things are still a bit quiet, but we did have something important happen for clients who are looking for ERC claims to be processed. And an article was published this week on Tax Notes Today Federal that opens up a question that I think I want to kind of have a little broader discussion of. So, help you understand how to read the code, which I think is important generally, but also understand that you might be skipping over an issue that's one that probably could affect, or at least could affect for a lot of us, at least one or two clients that get involved in certain scams. So, we'll talk about how that works. So we're going to start out this week is going to look at online scams and tax deductions, which is why how that online scammer you found on a dating site or who sent you a wrong number text or a wrong number phone call, voicemail, how they cheat you out of the money can have major differences in the tax treatment. And we'll discuss the differences today. We'll look at three specific types of ways that somebody could defraud your client, and why one of them we probably have a really good case for a deduction, while the second one we have a possible case for deduction, and why the third one we're just flat out of luck under the current tax law. So we'll discuss how that works, why that works, why in the world does a code work this way, and go from there. And then we're also going to discuss that IRS announcement this week regarding the future of their ERC claims processing program. That'll be very important information for your clients who maybe are, have an ERC claim in process that the IRS hasn't yet done anything about. And we'll talk about, is that thing going to move forward? And also the fact of what about clients who are now getting rejection notices? What are their issues? Is the rejection notice correct? And what do we do proceeding going forward? So we'll talk about a little bit about that, as well as what about those clients who filed a claim after September 14th? And for that group, I guess we have as good a news as we could reasonably expect from the IRS, unless one of those court cases wins. We're going to basically have at least some move on for ones at least through the end of January of this year. And of course, we'll discuss, as you probably can guess why, but just in case you haven't, we'll remind you about why January 31st, 2024 is a date that temporarily the IRS is going to halt on for a while. Let's go ahead and talk about this online scam problem and why the approach used to take your client's money can make a huge difference on taxes. This is an article by Nathan Richmond. It's Pig Butchering, Theft Losses May Evade TCJA Restrictions. It was published in Tax Notes Today Federal on August the 8th. And Nathan, in this article, is discussing with three attorneys in tax practice about the potential issues that might arise if you have a client who is a victim of what's called, as the title of the article says, a pig butchering scam. So we'll do that, plus talk about other variants of scams and how they're impacted. Okay, this online scam referred to as pig butchering. Now, like a lot of online things, we assign labels to stuff, and this label is assigned. It was apparently based, just kind of like fishing was the rock group fish combined with the idea of fishing in general. So that's why we spell PHISH. But nevertheless, same issue here. This apparently goes back to a term used in China that is meant to discuss that, the theory being that when you're butchering a pig, you want to use as much of the animal as you can. Okay. And the concept here then is applied here conceptually with the same idea. We are going to use as much of the victim as we can. By that, I mean as much of their resources, investments, and things like that. The idea is if you run this scam right, you'll be able to totally butcher the pig with your client, unfortunately, paying the unfortunate role of the pig in this comparison. So the idea is we're going to get everything from the client. Now, these days, it normally begins by striking up an online conversation. It could be done via romance and dating sites. It can be those, wrong number phone calls, or it could be the wrong number, or like, texting to the wrong number or wrong location. So you've got that. So they're looking for somebody to make a connection with. But this connection has nothing to do with romance, despite the fact in many cases that's going to be how it's going to be presented eventually. It will either be on a dating site. Obviously, you would assume there's romantic interest being sought. But if it's one of these, lost email, or one of these wrong numbers, or one of these more likely texts, the idea being that, well, we're just going to start this conversation and naturally the romance will bloom out of it. It'll be a remote romance because, of course, they are far away, but you'll see what it is. And as in always with these romance-based scams, they're looking at vulnerable individuals. Um, those who maybe recently had lost a spouse, death, could have been due to divorce, but somebody who is just kind of lonely out there and, is going to make that connection. And reason you want that group is you don't want them asking too many questions. We are very good at believing what we want to believe. And the scam is going to run that as far as it can. And you're not going to ask questions that you don't want to know the answer to. That's just natural. People react that way. The scammers will take advantage of that. As I've always told people for years, a con man wouldn't be a con man if they look like a con man, the way you think one should look, right? In essence, these people are going to ingratiate themselves and they're going to play right into what your idea is or what the client's ideas are, what they'd love to see happen. And this conversation does not begin, it begins totally innocently, because that's also a flag. Most people are aware that if I respond immediately to a fake text email, saying, I get, let's say not an email, but let's say a text, and it says, John, why aren't you returning my calls? And, you just return back and say, well, I'm not John. Or maybe it even says, Mary, why aren't you returning my calls? So it seems like, it's just an innocent sort of thing, or are we doing lunch on Tuesday, Mary? Comma, Jen. And, you just return the thing and saying, I'm sorry, I'm not Jen. Must have the wrong address or number for this. So you probably should try again. And then suddenly you start this interaction with Jen. I should say, well, I guess I was Mary in that previous one. Jen, and you and Jen start this conversation. And definitely initially, it's going to be very innocent. It's not really going to seem to be moving into asking you for money, right? Because the catch is that this is part of the fattening up phase, shall we say, of the pig butchering scam. I am trying to, if I'm the fraudster, trying to build trust in the party to get them to go along with me. Eventually, it moves on into potentially, it could just stay as a friendship, or it could actually move into a theoretical relationship, although it's going to be a relationship that you never see the person. That's how this works. So in any event, though, it's going to build. And remember, again, you're talking about especially on the romance side, you're talking about a group that is very vulnerable. And like I said, they're not going to ask the questions because they don't want the answers. And look, everybody is susceptible to things like that, to believing what we want to believe. And so that's part of the game here, is to do that. Now, the difference is for many years, the same scam has worked. I have had a couple of clients over the years who had this scam played on them in person, right? Both cases, somebody came new to their church, right? Was new in town, etc. Eventually struck up this, became friendship, etc. Built the friendship, because you realize what they're doing was scouting for the vulnerable people. Build up this friendship, and eventually started skimming money from them for various emergencies, other issues. And again, it's obvious in retrospect what was happening, but at the time, people just didn't want to know the answers. So every time it just kept going. And now the problem with that one was, though, you had to give some risk because you had to actually see them, right? It also couldn't work a whole bunch of them easily at one time because, it might become known because you're in like a church, that the other members of the church, the members might talk with each other. And if 5 of you are all supposedly in this deep love relationship with Joe, it might become a problem quickly. And, it would cause everything to blow up. So that it didn't really, you couldn't go as big and you couldn't do as much, but it definitely happened. This is not new with the internet. We're doing stuff like this. The internet just allows us to do scale. Shouldn't say us. I'm not involved in one, but it allows the scammers to go to scale. And that's really the big thing. So this time, though, instead of saying there was this emergency, oh, my car is broke, I'm going to be fired, you know, oh, my dog is, my dog is so sick. I've sent you all these nice, I've showed you all the nice pictures of, Bowser, and, and obviously now horrible. We need this. I don't have the money for this, right, etc. Getting all that going. Now we're going to go a little different route. We're not going to play on this. Now, we may use the romance to convince you to go along with it, but, to at least get the trust level up. But this is going to be a straight up investment scam that we're going to be looking at here. The talk turns to investment, often but not always crypto based. Crypto, it likes to be used because it has some natural, shall we say, attributes that make it much better for doing scams. Not the least of which is the difficulty of actually trying to figure out what happened, tracing, no centralized location for much of this stuff. And while, yeah, there's a ledger, we got to figure out who's on the other end of the address. And that's not necessarily going to be the simplest thing. So very much like that, it's, crypto-based stuff is there. And also you tend to make sure you're dealing with somebody who really doesn't understand crypto when you're doing this, because you're going to pull this by doing a few things to work through it. So generally, the person who's working for the scammer, and usually it's working for the scammer. I remember CNBC had a story about this a little while back, as I recall, and I've seen it on a couple of other places as well, reporting essentially the same thing. That a lot of these are basically phone call rooms, and what they do is they go and recruit people from relatively lower income countries, offer them this bright, perfect future. They can come to wherever. And what happens is they get shipped out to another country, and then they're housed in this building and essentially not allowed to leave. Right? Because it turns out they never got legally processed in the country, apparently. And of course, our scammers who are making lots of money generally are going to pay off certain people to make sure that they're, when they come in, nobody notices. But if one of these people tries to leave, then suddenly, yeah, they're grabbed immediately. They're thrown in jail. Other things happen. Eventually, if they're lucky, they get deported back to the old country where they're back to being unable to pay for anything. And yeah, it doesn't work. So in any event, you're going to see these rooms with people on the phone or texting, off scripts or doing similar things. And all they're doing is running these scams, right? They're there. And, they may very well be there, and they'll be there. Now, sometimes it's not anything like the person you think it is. Other times you will actually get on a video call with this person, and they'll be there. They'll be there real. But they're going to say, hey, and eventually somehow they'll drop in there. Oh yeah, I've been doing a lot of investing in crypto. It's been going really well for me, which is great. And then the conversation turns to it. You're on this video call, so they show you the evidence of how well they've done. And they take you to websites that purportedly show how their investments have grown. They've done so well on doing this, and they've already learned that maybe, you could use a little bit extra money. You want to get better returns because you think interest rates were horrible. And, so you want some sort of good risk-free return. And they convince you, oh, this is no risk. Look, it's great. I've been doing it now. I do it consistently, and I'll tell you what, I'll show you how I do it. And I'll offer to show you how to invest. Also, where not understanding how crypto works well, because there are things here I think somebody with experience would spot immediately as that doesn't make sense. But they're going to do this because crypto is this odd area. They're going to help them. So first thing is you may be taken first to a true legitimate site and obtain crypto. Right? You'll buy crypto from, any standard Coinbase, one of those places, and just obtain crypto through a normal standard means. But remember that this person's using this special investing site. And so they'll definitely have a reason why you wouldn't leave it someplace that actually could verify. So they'll have you transfer the crypto to their investing site, right? Now, you don't know it's theirs, and it's theirs only in cases the scammers are pulling it behind there. The person you're working with is probably, as I say, in some ways, nearly as much of a victim as you are at this point. They have no way out, so they got to go ahead with the script. So you transfer it there, and they show it there. You deposit this money with the fake organization. And our goal is to show you great returns. And show investment activity, show it just like Bernie Madoff did, right? Everything's going great, right? It's all running, except this isn't really a Ponzi scheme. They're not going to pay out returns. This is a much quicker and shorter hit. But the goal is to eventually get them to keep transferring more and more of their funds into this investment account. Now, of course, the problem is this website is a total scam, right? There are no accounts. The crypto, as soon as it was transferred in, was transferred over to, another place. We moved it around a bit so you can't find where it went, but you have no crypto there. Now, they might allow small withdrawals. So, in essence, and that might help you believe it's working. So in essence, yeah, they'll put some crypto back in and enable you to transfer it back over to Coinbase or whatever, right? And you could sell it off, or maybe they even offer, they'll transfer over the cash, right? Whatever in that case. But various things, they'll probably let you do minor withdrawals. The catch becomes when you want to do a major withdrawals when things go badly, because the funds are all gone. So normally you no longer can get connections, and the website kind of goes away. Either when you start trying to make a big withdrawal and they can't dissuade you because they will try to tell you how much taxes you pay, or how many, or there'll be fees there you just want to do. There'll be some reason why you just don't want to do it. But if you insist on going forward, then everything kind of drops. Or similarly, you stop putting money in, so now they think you're getting suspicious. There's no more money to get, or we've gotten everything from this quote from the victim. We butchered them already. We'll just drop them at that point, and suddenly their money is gone. There's nobody to go back to. Suddenly this lifelong, this brand new romance would be forever is gone entirely. Nobody can find them. You can't find them, and they're not, none of their backstory works. And yeah, we've got a problem. The funds are long gone. Now, our key question is, okay, that's all sad, but is there a tax deduction here? Let's think about, is there a way to get a tax deduction for this situation? Now, you might say, oh, well, it's an investment loss, right? Because we bought crypto and the crypto was worthless. Well, the problem is you didn't buy crypto. The only crypto you had was the crypto that you took and you voluntarily gave, even if you didn't know you were doing it, but you transferred it to this other wallet address. And it turns out that other wallet address was a scammer you weren't aware of, but still you did it. That wasn't an investment. In fact, what you really did was you invested with them, so you bought. And even though you transferred crypto, remember the theory was it wasn't going to probably stay as Bitcoin. It was going to become some other thing you couldn't buy on Coinbase. So you transfer that in there. They would then claim, oh, we've changed your Bitcoin into whatever, right? And that'd be the structure. We'd go from there. So there really is no investment there. So it's not there. And secondly, if it was an investment, or the problem is capital loss treatment, right? They've been stuck for, they've walked away with or lost $200,000, $300,000, and they're going to get $3,000 a year. Yeah, that's not going to do a whole lot of good anyway. So who cares in that issue? Okay. So let's talk about is there a deduction. 165A does deal with deductions for losses in general, and generally allows a tax deduction for losses. Now, that's a general rule that is subject to restrictions, not only in other code sections like the capital gain loss rules override these loss rules. That's why we like to have the $3,000 a year restriction. But there also are some restrictions inherent in this section itself. Now, this loss, you look at it and say, well, that's a theft, right? They stole the money. There's no question it's a theft loss. It'd be a theft loss under the rules of the state in question. There are many things we sometimes wonder if it's really a theft or not, but this one clearly is a theft. They were stealing the funds, right? Total fraudulent, totally under false circumstances, and they were not providing what they were saying. That was just, they weren't providing anything, really. They were just taking funds. So it's a theft loss. Now, theft loss is mentioned in 165 at 165C3. So because of that, let's take a look at 165A first. General rule says there shall be allowed as a deduction any loss sustained during the taxable year and not compensated for by insurance or otherwise. That is the general rule. Unless there is something that says otherwise, that's the rule we work under. So that's easy. Then we go to, and this is where most people would look and suddenly their eyes are going to fix on something here, and they're going to say, well, I found it. It does talk about limitation on losses of individuals. Well, our client is an individual. Corporations don't really have too many romantic interests, right? Neither do partnerships, right? But individuals do, right? So that's kind of the issue. It's going to be an individual in most cases. The deduction under subsection A shall be limited to, and there are three things listed. But number 3 is going to catch your eye immediately. So if we skip down to number 3, it says, except as provided in subsection H, that in mind for a second, losses of property not connected with a trade or business or transaction into for profit if such losses arise from fire, storm, shipwreck, other casualty, or from theft. So immediately you lock in here and say, well, this is a theft. Okay, good. So we're there. 165A says we can claim losses. C says, well, generally you can only claim them if they meet with these categories, but hey, we found a category. So great news, except 165H5 was added by the Tax Cuts and Jobs Act, and it bars a deduction for any personal casualty loss for years 2018 through 2025. Now, these losses for individuals under 165 are generally referred to as casualty losses. So, we're talking about casualty losses. They weren't trade or business standard losses. They were losses due to, somebody doing something, therefore the asset's gone, or it was stolen, or whatever happened. That's kind of the background they're looking there as to what's going on. Now, you might think getting scammed in a romance-related scheme, and a lot of these do have the romance hook in there because that's a way to get a very vulnerable population who will not ask questions. Again, they want to believe it. If you want to believe something, you don't ask questions that might give you the proof that it's not true. So that's where they're going after. But you might think that's like a textbook. What could be more personal? What could be more of a personal loss, casualty loss, than being scammed by somebody based on you thought this was your lifelong love? Okay, I mean, that seems inherently wildly personal, right? So there's no deduction allowed. Well, not really. Right. But let's see, this says here, limitation for taxable years 2018 through 2025 added by the Tax Cuts and Jobs Act. And this says, there shall be, right, any personal casualty loss that would be deductible in a taxable year from 18 to 25 shall be allowed as a deduction under subsection A only to the extent it is attributable to a federally declared disaster. Well, this is not a federally declared disaster. The definition you're going to find there in I-5 is basically the standard Stafford Act definition. It's going to cross-reference. So it's not a federal disaster. Now you're thinking, well, we can't claim a deduction. And by the way, many people thought that's the case. Many people are going to think that's the case. I talked about this in the Tax Cuts and Jobs Act update courses we had way back. We're doing those. That you got to be very careful here about how you read things, and especially in this case. Because the catch is we can always have definitions, and sometimes definitions can change what appears to be the obvious meaning. So this issue of personal casualty loss is not an undefined term. If the term was never defined in the code, then essentially we would use what would be the plain normal meaning. And under a plain normal meaning, most people would think of this loss to be personal, right? It's a personal loss. It's a theft, again, personal item, right? It just seems to be personal, right? Automatically, right? Because it's going to individual return. Except there is an actual definition of what is a personal casualty loss found at 165H3B. But initially, this doesn't look helpful because it specifically applies to losses under 165C3. Remember the code section I showed you that had theft in it, right? Specifically says it applies to that. So what that definition says is, for purposes of this subsection, and A just talks about the netting for personal casualty gains. A personal casualty loss means any loss described in subsection C3. Okay, well, the theft was in C3, so it would still be personal. So why are we worried about this? It's still personal. Now we want to go back and take a look at how we read C3. Okay. Because remember, only C3 losses get caught by this. That's the big thing to remember here. If we can get the loss there, now it's individual, so I got to get it under one of the three sections. If I can get under C1 or C2, then this rule, it means it's not a personal casualty loss, which means the limitation in the TCJ won't apply. You follow that back, you got to follow the bouncing ball, because this is one of those, It's not the most obscure because basically all of this is in the actual 165 code section, but you have to follow it and you have to understand it. It turns out the crypto loss isn't covered by 165c3 because of a clause it's really easy to skim past when reading. And I suspect, now some of you probably spotted it. I think a lot of people are thinking back, I didn't see anything yet that told me it wasn't going to work. Rather, this was a transaction entered into for a profit. We're going to find out that means it's probably covered by C2, unless somehow related to a trader business as well, and be covered by C1, but not C3. So let's look at the three segments. Lots of individuals. So now let's look at all three of them. First, you can claim any loss incurred in a trader business. Number two, you can deduct any losses incurred in any transaction entered into for profit, even though not connected with a trader business. That's usually investment activities, right? So you enter into the transaction primarily for a profit. I mean, overwhelmingly for it to make money, okay? And then number three, the section that we did, yeah, you remember that said losses of property not connected with a trader business or a transaction entered into for profit. Buying the cryptocurrency was entered into specifically, investing in that, what turned out to be a fraudulent site, was specifically because you were trying to invest in cryptocurrency and you expected a great return because that's what your love of your life sold you, was there'd be this great return. It's not going to be there, but that's fine. So because of that, we are looking at number two, or potentially number one, most likely number two, but potentially number one. And that means the TCJA block no longer blocks it. Also means this thing can qualify for NOL treatment. The problem is we can't carry them back anymore, but hey, one thing at a time. Now, while the article pointed this out, while there may have been an initial romance or friendship hook, and there always will be that at the beginning, that's how you get the trust. The transaction that created the loss was entered into by the taxpayer for a profit. This was like investing with Bernie, except Bernie never really, was never accused of misleading somebody into thinking that Bernie was going to be the love of their life, in order to get them to invest money. Because now Bernie worked. This is basically very, very much the same, right? But now the problem becomes, what happens if the taxpayer is rather tricked into transferring funds to the other party based on a false story of an emergency? That is the traditional scam before crypto became big, would be that you would gain their confidence, they'd be the love of your life, and then they need money. Maybe they need money because they can't afford, like, oh man, I want to visit you, etc. And do this, come out and see your place. And, I think it'd be great. We could have a great time. It sounds great wherever you're at, want to go there, but I just don't have the money to go, and get you to offer then to, quote, send them the money. It's going to be a very expensive trip, you discover, and take care of all that stuff to get it done. Or they might have a medical emergency. There could be a family member in deep trouble. There's going to be something, they're about to get thrown out of their house or their apartment. There's going to have a reason to transfer those funds, and this can get extreme. What about that? Is that going to work? Well, that one, no. Because here's the problem. You still have a loss, you still have a 165A loss, but that loss is now the 165C3 loss for theft in transactions not related to, not coming from a transaction into for a profit. Yeah, getting a love of your life is not a profit. That's kind of how that works. So, like it or not, you can't deduct that one. Now, the attorney quoting the article believes the pig butchering crypto position has substantial authority. And maybe even it's more likely than not. And I when I was teaching the TCJ update courses, I said basically the same thing. I think it's clear an investment loss in a scam where you were misled to believe you were investing is very, very much like the Bernie Madoff crypto scams. And those qualified for NOL because they were C1 or C2 items and not C3. And the same thing is true here. It is not a C3 item. If it's not a C3 item, you get it. It's a C1 or a C2 item. And that's important to understand, right? And just like those I said that invested with Bernie, they believe they were buying real assets. In Bernie, it turns out they really weren't buying very many of the securities they thought they were buying, right? Bernie was kind of skimming off that. There were a lot of buys that weren't buys, at least of underlying assets they thought they had. Now, it also discussed, one of the attorneys brought up some retirement scams we've seen recently, the retirement fund scams, asset protection retirement fund structures. In those scams, the people get a phone call, and I heard of one that was like a double team. They supposedly had the local cops call and tell you that, there was this report, these things are happening, etc. You need to talk to like the federal banking authorities and we're going to have them call you, and then you get a follow-up call from the federal banking authorities, etc. And they tell you, oh, your funds are at great risk right now. You need to get them out of there as quickly as possible. We're investigating, so we need you to make this withdrawal. We're with the FBI, we're doing the investigation. We need this withdrawal. So they say then they're going to have the funds withdrawn, and they were moved to a safe location at the direction of law enforcement. Well, I have safe in quotes on the slide for a reason. It's obviously not safe, and law enforcement in quotes too, because it's not law enforcement, right? It's the scammers who are working this thing. And in this case, you usually have a lot of personal data. It could have been harvested many ways. It basically, there's been a lot of, just leakages of data from, big cell phone companies. AT&T had one recently, T-Mobile, etc. We're looking at things like that leak lots of data. So there's lots of ways that they can find out information that will make them sound very convincing. Most of us have had our data leaked in some way or another. Find out, if you're somebody who's sitting there worried forever, I always phrase it this way, but, oh my God, I go on a website and, they're tracking me. It's like, okay, there's a concern there, but if you think this stuff is coming from there, nah. There's straight up full leaks of everything you voluntarily provided to any organizations. Might have not had much choice but to provide. And you're just kind of stuck with it. So those funds go somewhere safe, and obviously the scammer walks off with the funds. So these people have taken their $500,000 out of the retirement account. They have now moved it into this, quote, safe location, and suddenly everything goes silent, and the $500,000 is long gone. Right? Turns out they wired it somewhere that really wasn't somewhere it should go. It was out of the country, and once it gets out of the country, it's not going to be recovered anyway easily, because those funds move quickly out of any location that it could be easily traced to. So yeah, it's a bit of a problem. Does that qualify? Well, maybe. The problem is the actual theft was not making an investment. Now, maybe we can argue you thought you were transferring it to an investment account, but they could also say, no, you voluntarily withdrew from what you knew was a retirement account. You put it in an account that you should have realized wasn't, because they never said it was, probably, or nobody's going to make that point. But secondly, you just voluntarily took the funds out. That triggered the tax. And the theft was just taking funds that were just your funds sitting in your bank account now, right? That's not investment at that point. You were just trying to protect them by parking them somewhere temporarily. Like I said, I clearly see reasonable basis for that position. But can I say there was substantial authority? I think that'd be a stretch for substantial authority. The attorney who mentioned it also thought that probably it's reasonable basis with disclosure, and you may have a little bit more fight on your hands, but you might consider using it. And he suggested, especially if you're in like offer and compromise situations where somebody got billed like mad for this, can't pay the tax, and they lost all, it's too late to amend the return, but you could use this an offer case to say doubt as to liability by arguing that, well, they really should have had a deductible loss in that case, and this would be your theory to try to do it, would be there. Okay. Now, key question. The obvious issue here is this is a really good illustration about why you need to carefully read code sections. And also why, if you don't read code sections, because you think, well, that's a waste of time, and I'm not going to do that. I'll just read the summaries people put out. I'll go to a CPE course and read a summary. You really can't parse which of these situations qualify and which don't, unless you're able to parse Section 165 itself. Because I doubt you're going to go to any course that's going to have these sorts of things laid out this way. And nobody would say that can give you a rule. Too many people I know are in tax get into the concept of rules. That is, instead of remembering where it says in the code, because that's where the rules really are, they rather kind of develop this in their head idea of what the rule is, and then they try to apply the rule to every situation they see. And if you try to do this in this area, because again, there are other scams. And anytime you're faced with a scam, you got to start thinking there's a loss. My client was scammed, there's a loss. How does it fit in the 165 whole, let's go down the hierarchy. Which thing is it really? Because remember, 165 C1 or C2, great, we can claim the loss. 165 C3, unless it's a federal disaster, and this is not going to make that, you're just stuck with non-deductible. So, be aware of that. And also then, you're going to have to ask for some information and, tell the client, realize it may be, and be understanding. There's nothing wrong with getting scammed like this. We all believe we can't happen to us. And my bottom line is, I suspect if the situation is right, it can happen to anybody. So be aware of that. Nobody is protected. It is very, very, if you're vulnerable, especially, there are things you want to and may need to believe, just because for your own personal well-being to feel well. Now, this is going to help the enemy find us wrong, but that's another issue. So as I say, don't be afraid of going that route. Tell the client's okay, but we need to know the data. I need to know what happens. Remind the client that CPAs, EAs are under a confidentiality requirement. We're not allowed to disclose the data you give us, the tax information you give us. That would include this story so we can figure out if we've got a potential deduction case or not. But, basically, that's going to be what you're going to be working with, is saying, look, I need the story, though, because I have to know the facts. I've got to be able to say, is there a way to make a case that this was an investment activity rather than a straight up theft? And for a client, probably explain, if somebody comes into your house, and walks off with your television, that's a straight up theft. That was an investment. If this guy says, oh my gosh, I'm going to be thrown out by my landlord, I'm going to be evicted unless I have like $1,200 tomorrow, that's a straight up theft. That wasn't an investment. But when they're pitching things like this, or it touches on investment assets in a way you could argue is investment related, then I think we have a potential argument. So, be careful there. Make sure you understand it. And I would say strongly, everybody should read Section 165. Read it and understand it. I know people think that it's horrible, the world's going to end if they read code, but this is a case where you better understand that code section. Because if you don't, you're going to do your clients a disservice. If they're involved in scams like this, you're going to do them a disservice if you don't at least understand what are the possible positions, what's the strength of the position, why is there a strength of the position or lack of it, and then advise them. Okay. Next up, we're going to talk about the IRS's news release 2024-203 that came out on August the 8th. This news release announced progress in handling ERC claims. The IRS announced last fall is putting in place a moratorium on processing ERC claims. They were not going to process those received after September 14th of 2023. Right? The IRS later announced that it divided a portion of the pre-September 14 claims, this was a few weeks ago, into high-risk claims. Basically, these are ones the IRS is just simply going to disallow. Right? Low-risk claims, these are ones that the service plans to pay without question. And then the middle group, which are ones that are going to require more information and therefore take longer to work. Okay. And remember, we discussed the case recently where the IRS had, almost got a court order saying you have to stop doing this moratorium bit. I don't doubt that may have helped them when they saw that case was going. It might have helped get this one out. Because one of the key complaints, remember, in that case was that they'd never actually loosened up the September 14th date. So here's some announcement of what's going forward. Now, first thing to tell us is they've sent out 28,000 disallowance notices to high-risk claims. So these are ones they think are just obviously in error and they can dismiss without getting any more information or making any more inquiries. Okay. Now, a number of professionals have reported in various venues I've been on that the IRS appears to have made certain errors here, Like, it begins to appear that they might have decided if you had a disregarded entity LLC was filing payroll tax reports, that EIN was not being used on a tax return, a 1065 or 1120S, etc., 1120, that, oh, well, you weren't in business. Well, obviously, if it's a disregarded entity, it files payroll tax returns under its number, but the income tax activity is reported under the owner's ID number. It does appear they missed some of those. And so we've got a few of, we know we have some of those in the mix. As well, some of the notices went out without having the proper information on the taxpayer's rights to appeal. If you get one of these notices, there is a right of appeal in addition to your right to take it to court. You can go through the administrative process of appeal, and then once the appeal's done, you then have the right to go to court. So, that's something that they don't have there. That is an option to consider, even if the letter doesn't say it. You don't have to go to the district court. But still, the IRS claims the vast majority of these claims are correct. These disallowances are correct. So that is their position. They do admit some are wrong. They do admit they'll work with people when they're in error. And I know, like I said, I know a lot of CPAs who have claimed to have received their clients were part of these 28,000, and they claim it's just flat out wrong. Right? The IRS got it wrong. They didn't understand it. The other concern, 28,000, if the IRS believes they can dismiss them based on looking at nothing more than what was in the notice, what was in the claim, I think the client maybe should also be considering legal counsel, largely because, if the IRS believes that, that means they believe it's virtually a criminal filing in many cases. And I think you need to have an attorney in place to discuss with the client what really happened, to make sure the full story's out. Because they might have lied to you too. We'll just phrase it that way. Before you go forward, because yes, there could very well be a criminal view of this. The IRS says, well, look at how much they try to defraud us, so we're going to do this. So that's bad. Next up, they also announced they are processing 50,000 low-risk claims in those received before September 14th or earlier. They're going to start issuing refund checks for those, right? They are now beginning the process of getting them ready for refunds. They believe that they're going to be issuing checks beginning in September for this group, right? And they expect that they'll be able to add more to this group of low-risk claims as they do additional processing and work through more of the backlog. So they do expect from here forward, therefore, the implication is from here forward, there will be refunds issued, continuously. The catch is, though, you got to be in this low-risk group. So far, we don't really have any timetable whatsoever. Well, we know the ones that are high risk and they say disallowed, those aren't going to get checks unless you get something else to happen. But we don't know how long it's going to take the service to work those in the middle. Nothing about that in this either. So be aware of that. Finally, they said they will start the process of doing their initial investigation on the post-September 14th claims. Some of them. They're going to look initially to classify these items into 3 categories. And those are the 3 we've had before. Now, they did say specifically they're going to cover claims received after September 14th up to January 31st, 2024. That January 31st, 2024 date is not accidental, right? It's because Congress had the legislation that was passed by the House would cut off the program for any claim filed after January 31st of 2024. You may remember back in January, I had suggested you rush to get all your claims in by January 31st, because if Congress passed the bill and the House passed it overwhelmingly, the catch is you're probably going to be out of luck, or you're going to have to litigate to claim they couldn't cut it off. You don't have to try to do something like that. Obviously, the IRS does not want to work anything received after January 31st that wasn't postmarked by that date, because as far as they're concerned, they might not ever have to process those. If Congress goes forward with their threat, it would be true. So I don't think you're going to see this, I don't think you're going to see them go to claims or say they're going to process claims received after January 31st of 24 until after at least this Congress adjourns, right? Again, remember, we talked about Senator Schumer basically voting against cloture. So he had a right to put forward a motion to reconsider. He has a right to do that once in the remainder of this Congress. Now, when we get to January and the new Congress comes in, that's start over time. We can't use the House vote anymore. So the Senate can't just approve that because you'd have a House from one Congress, one basically Congress out there that was put in place, and then the second half being approved by a Senate from the later one. Now, you can't mix them that way. So it'd be back starting over, having to get both the House and Senate vote to do this. So keep an eye on that. But as I said, I would expect the next announcement of opening up more processing to come no earlier than January, if not even waiting to see if there's any sign that the new Congress is going to pick this up and work with it. I'm not sure if they would if the old one couldn't get through, but we'll see what they end up doing. So we'll keep an eye on that. So not really necessarily all the news you'd want, but at least there is some movement. So keep your eye on it and watch out for those disallowance claims. Because remember, those are what we're seeing right now. The $50,000 are going to pay out. We have no idea when the first contact is going to come telling you that's good. If it's like the IRS usually does, you'll find out you're getting the check when you get the check. Remember, you always tend to get the check first and then the explanation later. I don't think those 50,000 are going to be aware they're in the 50,000 until they actually get a check. This has been the current federal tax developments for the week of August 14th, 2024. Current federal tax developments, as always, are brought to you by Kaplan Financial Education and your state society of CPAs. Again, I'm here. You send email to edzollers@currentfederaltaxdevelopments.com if you have any quick questions on these items. You also can catch me somewhat online on the Connect sites for the Arizona Society of CPAs, New Jersey Society of CPAs, for Minnesota, also for Illinois, right, and Idaho. Keep track of all those. So if you're a member of those societies, you go to their Connect site. You can pose a question. If I see it and I believe I could be helpful, I may post a response. So keep it there. Otherwise, hopefully you've had a good week. We'll see you guys come back next week to see what's up and to see what goes on. We probably will have something new happen just because we always seem to have something new happen in the area of current federal tax developments.